Okay, good morning to any replayers. If you're a replayer, don't forget you can participate many ways. First of all, you can tap on the screen for hearts if you're watching on replay. That helps me know if you enjoy the show. And you can also share the feed with other people. Make sure you do share it when you think people need to hear and learn about money or they're struggling, because every day I talk about money and try to help people. And of course, you can find me on Twitter at joannazarach, as well as the Snapchat. If you have questions you want to ask, that's a perfect place to do it, and also get to know me. Okay. For everybody else, good morning. Hi, Melissa. Oh, look at the crazy hair. Anyway, pre-workout. I've been, sometimes I go to the gym in the morning, and then today I was like, I need to really work on this calculator. Okay. So if you're new to me, my name is joannazarach. I broadcast every single day, 7 days a week at 10 a.m. Central Time, and I talk about money. I talk about money because I don't think enough people are talking about money. And it's actually a place or a source of significant stress to people. And I feel like, if we just had a bit more conversations about money, then we would all get out of our money problems. And so it doesn't happen overnight. So I'm a get rich slowly, accumulated wealth type of person. So I'm doing money habits every day, and then on Friday I'm going to do a Money Matters at 5 p.m. Not sure yet what on the topic. I feel like there's a rotation of topics in my head. So what am I going to talk about today? I'm talking about it's tax season, so I'm more focused on taxes than usual. Although if you've heard me talk about it, there are really 5 levers that you need to understand if you're going to build wealth over your lifetime, or if you're going to preserve it. I think a lot of people are so focused on just earning money, but they're less focused on keeping money. And that's where I come in. I want people to recognize what is going to retain their wealth and keep their money. And so income is definitely important. I understand this. And if you are having trouble in your profession, whether you're an employee or you're a business owner, and you're struggling to generate income, for sure, you need to solve the income problem first. The thing is, though, most people, the more the income they get, the more expenditures they acquire, so they don't actually keep money. So just having a high income is not enough. The second thing that we're going to talk about today a little bit more is taxation. If you do not understand how taxes, your biggest expenditure when it comes to your income and your earnings, how that taxes work and how our tax system, this is US specific, if you don't know, if you haven't taken the time to understand how taxation happens in the US and how earned income and self-employed income and investment income and how all the different tax deferred plans work, if you haven't taken the time to learn it, to understand it, to just have a concept around it, it's going to be tough. It is. And so I'm going to talk about today, because there's a couple things that I really want people to get clear on when it comes to taxation. The third one is investments. If you're going to keep your money, you've got to grow it. And you can invest in a lot of different places. I'm a conservative investor. And when I say it, I mean, like, for all the different investment opportunities available to me, I invest in the stock market and mutual funds, just very kind of boring investments. I don't do startups. I don't do real estate. I don't do a lot of what I think is crazy. And the reason I call it crazy is because I don't understand it, right? If you don't understand your investment, if you don't understand how the money flows from your investment back to you, then you don't understand it, and you shouldn't do it. Always ask questions. Ask questions so you blue in the face. If someone's not willing to explain it to you before taking your money, red flag. So understand investments. And I like to say Warren Buffett's my advisor, financial advisor. I just put my money in mutual funds that are low fee. Fees will eat into your wealth building. Number 4 is big purchases. Before you make a big purchase, consider how it's going to impact your net worth and if it's an asset or a liability. An asset is something that generates money back to you. A liability is just something you consume, or it's a consumable action. An asset or a consumable. Investment or consumable. And the 5th one is risk. If you're not thinking through what risks you have in life, especially when other people start depending on you for their livelihood, so children specifically, or even aging parents, if you haven't really thought about it, you need to spend some time on it. Okay, so I've talked about this tax calculator before, and this is what I run into this every, even for myself, this annoying tax table calculation. And so I actually will show you what I'm struggling with, what I'm working on. But I've actually, here's what I have. Here's the tool I'm using, and here's what I'm trying to accomplish. I'm going to show you guys. This is how the sausage is made. So basically, and you've seen some of this before, this is a 2016 marginal tax bracket. It basically tells you at which income, at which level of income, and marginal means your last dollar. So when you earn more money above this number, depending on your filing status, that's going to be taxed at this amount. So for example, if you're a single person that's earning $100,000 and you're now in a 28% tax bracket, for every dollar you earn after that, 28 cents of it is going to go to the federal government just for federal tax. We're not talking about payroll tax, because payroll tax also takes money out of your dollar, and obviously state tax. But right now we're just focusing on the federal marginal tax rate. And so depending on your filing status, and I'm only covering 3. I know there are more. There's married filing separately, and also like widower and other special statuses. If you have a special status, by all means, you're going to need to do a little bit more digging. Single married filing jointly in the head of a household is going to cover like 95% of households, if not 99. So I'm focusing on those things, because if you have a special situation, you need to consult somebody else or just do your math yourself. So I'm making a calculator that's going to work for most people. And so, okay, I'm trying to address the key things that make a difference in your tax estimate, not every single thing, right? So for most people, again, if you have rental income, if you have incomes beyond just the basics, what I'm covering is salary and a 1099 or business profit. So those are the only 2 things, and I'm doing you or your spouse have those 4 sources of income. You have other sources of income, by all means, you're going to have to figure out a different way. And by the way, if you do have other sources of income, you're probably way ahead in the game, in the money game, than the people I'm trying to help. I'm trying to get people to recognize what their marginal tax rate is. I mean, a simple calculator. So I'm getting, this is like your filing status. So I'm only using 3. You can put how many children you have, because the single married and the head of household will take care of whether you get 1 or 2 for your particular tax return, and the number of children. That drives the number of exemptions. So if I change this, if you're like, well, I have 4 children, if you change this number, see if Google, you can see this number changed, 5, and you're going to get a multiplier for your exemptions. Actually, I should probably put the multiplier here so people can see how it works. Then the deduction is driven off of the standard, which is driven by your filing status. And I'm putting in the 5, and you can put other, but the key deductions that people have that qualifies them for itemized deduction is typically mortgage interest, real estate tax, and the state tax paid, and probably donations. And everything else is in the other. People are always like, oh, what about this? What about that? I'm like, you know what? 9 times out of 10, you are not going to benefit from that deduction. So if you have a special situation and you can estimate it, just put it in other. But these are really the things that will drive whether someone should have an itemized deduction or standard deduction. And this cell calculates, and it actually takes a max, so it will do, it'll pick the right one. It'll either pick the standard one, where I'm looking at the tax bracket, or it'll do this itemized deduction. So the idea is to calculate your taxable income. I'm adding payroll tax. So one of the things that I'm running across is people who are 1099 employees are not, oh, thank you. People who are 1099 employees are forgetting that that's not their money. Like, you cannot live off the income you get out of your business or your 1099. I know it's like really, it sounds mean, right? But like, that's what gets you in trouble, right? Money, right? It is, you need to allocate a lot of the money that you bring in as a 1099 or business owner to taxes. Now, fine if you have an accountant and they're doing it for you and they're managing the money for you, you're going to see a lot less of it, right? You're not going to see that. But if you're just starting out, if you're a freelancer, if you have a side job and you have a W-2 income and you combine them, and all of a sudden you get a nasty surprise that you don't get a tax refund, you actually owe money. So please take that into consideration. So that's why I have a W-2 box for you, a 1099 for your business, that's all revenue, a W-2 for your spouse, and a 1099 for your spouse, because we need to include payroll taxes in this estimate. so that you don't have any nasty surprises. The other things you would put in is from your federal taxes and your state taxes, because you need to estimate that how much you're paying into the system. And what I realized is that most people are not going to like open a spreadsheet and do a calculation. So I'm going to have a little calculator on the side where you can put stuff from your paycheck, like your paycheck information. You just need 3 numbers and I'll calculate some of that stuff for you. But anyway, the idea is to understand your total household income, what all the what exemptions you qualify for, whether you have a standard or itemized deduction that changes. Here I'll show you. When you go to married filing jointly, this changes to the standard deduction for married filing jointly. And if you were like, well, but I have a really high interest, and you put in $16,000 worth of interest, I want you to see this, then the calculator would take this and say, okay, so your deduction's now itemized, so we're going to calculate off the itemized, not off the standard. Because basically what we're just trying to do is get an estimate of your taxable income. I'm going to add payroll tax, and this is kind of what I'm working on now. This is this looking up your tax. This is what messes people up, and this is why I'm investing my time to make sure you understand the tax brackets and rates. So I just started doing the single, and it's like what it is logic, right? So I need to figure out. I need to look up in the table for single filing status, and I need to add the amount plus the marginal tax rate above this amount. I know this is a mouthful, right? I'm basically translating these tables that I got for the 2016 taxable income, and I have 3 tables, right? And I have to put a logic equation basically that will calculate, that'll take this and calculate it for everybody. So that I need to do it's just like looking up into 3 tables. I'm not going to go into the mechanics of it, but basically it's complicated. To make a simple calculator is actually really, really complicated. So the goal here is that I'm going to give you your marginal tax bracket. So far I only got this to work for single, right? So single person, it tells you your marginal tax bracket rate. I want you guys to understand this number. So you say, well, it would be nice if I had all this money, but I only earn, let's say, $60,000, and I don't actually have a spouse, and I made some money, I didn't really make a side income. And it says, okay, you're 25%. And you're like, oh, that would be really nice, but I'm, 32,000 tax bracket. You can see that you're in a 15% tax bracket, marginal tax rate. And then we're going to do the estimated tax liability. So that's really it. It's the calculator I'm working on that I have been talking about for a while. But I'm really close because I've programmed enough into it, and it's going to go, I'm going to tweet out the link when I'm done, probably later today. And I really encourage people to do it. So here's the thing. Here's what I'm trying to do. When I ask someone, what is your marginal tax rate? I personally want to have a quick place to go to calculate it, but I also want people to be able to do the self-service and say, what is my marginal tax rate? Why is ultimately what I'm trying to do is get people to say these decisions that I'm going to make are going to be rational, right? Like about what? I don't know. I'm talking about a calculator for taxes. And so I want people to understand. So eventually what I'll probably do is once I get this down, I can tell you, like, if you invest in a 401k and you contribute this much, this is the amount of taxes that this is the amount of like tax benefit you're going to get. And it's really like to make a let's see, to make a long story short, I'm building this calculator because I feel like putting people's numbers in and then making them understand it through numbers, like I'm trying to for people to take actions through numbers, like to use that as the definitive reason for people to follow the path, right? It's not necessarily a formula to wealth, right? It's not like magic that like you do these 3 things and then like you'll be wealthy. But if you take these steps, I want people to understand that their net worth will increase because they've suddenly lowered their tax, and it's too hard. It's too hard for people to do the mental math. You can see that I, as a spreadsheet person, I'm going, oh, crap, like what are the steps to be able to make the simple calculator I have to put in like a few hours of my time to make a simple calculator because I wanted to work for multiple people, right? I'm investing my time to do that. And I also want a tool for myself when I'm trying to explain this to someone, when I'm sitting down with a family. Like, so I explained taxes to this family on Monday night. I was at their house. And I'm trying to get them to do TurboTax and just kind of like where all the numbers go. But the next step, so they're on a plan to pay off their credit card in the next 30 days, 30 to 60 days. And then after that, I have to convince them to do their 401k contribution for his job, right? And this is the tool I'm going to use. Like this is why I'm doing it. I'm trying to convince people to keep more of their money. And it's really, really hard because it's not what they're used to doing, and they don't understand the math. And I'm trying to illustrate math through this calculator and make it personal, right? Like making money math personal and to that person. It's like it's what I do. Like it's what makes sense to me. I'm an overly rational person when it comes to math and logic and numbers. But I'm not, by the way, I don't do mental math well either. Like I have to put in a spreadsheet to sometimes convince myself that I'm doing the right thing because the messages around are not the same. So anyway, so that's the walk, right? On Tuesday, I pick a topic. On Wednesday, like I struggle through it. And I'm like, oh, I have to do this. And actually, this is going to help me. Why? Because I've been using an estimator, for my estimated taxes for a few years now, which is horrible. I overpay in taxes because I was too lazy to do the specifics. So if you don't think that I'm actually making myself be better, like I want you to know that I'm making myself and my financial situation better by saying we all need to be more precise about this calculation and this estimate. And I'm trying to be more precise about my marginal tax rate so that I'm not just going, oh, if I do 30%, it'll be enough, which I know is true. And then I like end up with, overpaying the federal government and being lazy about my taxes, blah, blah, blah. So that's the calculator. Like I said, I'm going to tweet out the link so that people can go in. Again, I'm still experimenting with how to do that, but you should be able to go in and have a tab where you can just put in your information and it'll spit out your marginal tax rate bracket and your estimated tax liability. This is really, really important for people who don't have a W-2. It's like more important than just the like adjusting for your W-4 or anything like that, is knowing how much of what you expect to bring in business this year, right? If you're a coach, if you're a freelancer and you say, I think I'm going to sell $80,000 worth of projects, are you making sure that you have enough money for your taxes? And you need to do the quarterly tax payments, and you need to not spend all this money because you're going to get you're going to get in deep doo-doo. And one of the things that's going to help you realize is you got to make more, right? If you need to spend 80,000, you're going to have to make 130,000, and it does two things: you got to work harder, or you're going to have to up your rates, right? Like you're going to have to increase your rates, maybe work on more profitable projects or just learn new skills, right? So that's the challenge for people, because if you don't understand taxation, you may underestimate the income required for you. So that's the Periscope for today. You guys have any questions? Does anybody have any questions about the marginal tax rate? Again, it's one of the numbers. Like I also have like a little checklist of if you don't know these numbers, then you don't know your finances. Obviously your earn rate and your burn rate, your net worth. Now it's the marginal tax rate, your rate of return on your investment is going to be a really big one, and sort of what is your proportion of assets that are producing an income, your income producing assets and your non-income producing assets or consumable assets. And I think that's those like, if I could have a little scorecard for everyone, like your liabilities, of course, in there, and your rates, your interest rate. So I have a little scorecard for everybody, and I feel like everyone should fill that out. So scorecard. I think that's coming next. I'm going to do a financial scorecard and just put in and say, if you don't know these numbers, you have got to know them. You've got to know your numbers, right? It's kind of like if you're into fitness and you're into training, you know your numbers. You know your weight, you know your body fat, you know your cholesterol, right? Like you got to know your numbers. And this is the same thing for your financial health. You're going to have to know your numbers because you need to know actions you're taking, whether they're improving those numbers or they're detrimental for your numbers. And that's the only way to know if you're sort of what it is you're doing, is it working? So thanks a lot for joining. I'm excited about this calculator. It's been, it's a little bit harder. It always is. It's a little bit harder than I expected, but I want to make it more usable for more people. So thanks for joining, and I will be here tomorrow at 10 a.m. Thursday Throwdown, where I usually just rant about something that I'm really mad about when it comes to the financial industry or finances in general, or people's attitudes or the lack of knowledge, la-di-di-da. I will see you guys tomorrow. Bye-bye.